Our next guest is going to address the issue we just touched upon when we were talking about energy, and that has to do with that massive cargo container ship that is stuck in the Suez Canal. Let's invite into the stream Mark Szakonyi. He is executive editor of the Journal of Commerce by IHS Markit. And very simply, because the Egyptian government is saying, oh, we'll have it open within 72 hours. Experts are being quoted on Bloomberg saying, no, it's going to be several weeks. My question to you is, if the ships can divert around the southern portion of Africa and it only adds 12 days to the trip, are supply chains that tight that the world is really going to suffer, the headline in the New York Post, a global toilet paper shortage? I mean, come on.
No, I think that is a little bit overemphasized. I would say that there's definitely going to be disruptions. I think the important thing to remember is that this containerized shipping system has been under stress for 6 months. I mean, the amount of imports going into Western countries from Asia is just it's staggering. So this is really kind of the last thing that's needed in terms of containerized supply chains. But yes, I think for North American consumers, things are just going to be fine. It's more the European retailers and the manufacturers that I think are in a worse shape, just because more of that cargo is going directly to them. That's not to say there isn't some North American cargo coming through the Suez Canal to the U.S. East Coast, but this is mostly a European play.
And when you talk about that, we've seen a number of analysts come out with notes on this over the last 2 days or so. And when we talk about this disruption, then they bring up the fact that maybe this could trigger an uptick, I guess, that we could see in global inflation. Is that in line with your thinking, with what you're expecting that we could potentially see if this ship does not get cleared for several days?
I would say yes, and it's already happening. So we got to look at the whole story. I mean, the port congestion and shipping delays that we've been seeing in the last couple months have been pushing up material price costs already, and you can already see that in the IHS materials price index. So yes, this is having upward pressures on inflation. The question really now is, how much of this cargo is going to be able to move via the canal in the next couple weeks, and how much of it has to be rerouted around Africa. You noted how you're hearing conflicting reports on when this is going to be resolved. From my standpoint, watch what the container lines are doing. If you're starting to see the container lines starting to divert cargo around the Africa, that's already suggesting that, despite what the authorities are saying, they're not banking on that waterway opening up in the short term.
So when we talk about that, part of the discussion we rarely bring up is those empty containers. They need to be shipped back to China. So help us understand why that really is a problem, since they're not going to be going back anytime soon.
Well, what's happening is, as I mentioned, the Western economy's appetite for all kinds of U.S. consumer goods and e-commerce means that there's a major imbalance, a sharpening imbalance between the amount of import and exports coming. And what that's doing is that's forcing container lines to prioritize the higher paying import cargo, much to the frustration of North American agricultural exporters, particularly those that are moving cargoes from the interior of the United States, and there's not a natural pool of imports coming in for consumer goods. So that would be forcing the container lines to then reposition those containers. But with the import cargo so high and so well paying, you can see why the carriers would be prioritizing import cargo rather than exports, particularly lower paying agricultural goods.
Mark, I just have a question. When we take a look at something like this, can you just give us insight on how something like this happens? And I guess going forward, if at all the planning or the shipping in this area would change as a result of what we're seeing play out right now?
Yeah, I mean, it happened because you saw it in early 2020. So as, North American and European lockdowns came, the concern was, will we get the goods from China? That quickly shifted in the sense of, we don't need the goods. But then we were surprised by consumer appetite saying, yes, we do need those goods. And that's what we've been seeing, this rush of cargo. And that's really what's maximized or, maxed out the system, is that we're seeing volumes like peak volumes that we would see before Christmas restocking. Now it's happening every month. And we're not expecting this to let up until at least the second half of this year. So in terms of what companies can do, in this kind of situation, there's very little. They had no idea that the snapback was going to be this hard, and that's why they're scrambling to restock their inventories. And, whether, I'm sure you're seeing speculation that this kind of spells the end of globalization or, near sourcing and so with that. I'll say that, when we see these kind of disruptions before, we hear that hemming and hawing. But ultimately, Asia is the place to keep your production costs down. And I don't think we're going to see any seismic changes. If anything, companies are going to be keeping higher levels of inventory in case of these so-called black swan events, and also looking at alternatives. So when they do get caught in a lurch here, they've got other options.
Your advice, keep an eye on what the transporters are doing. I'd like to make the request that we have you come back maybe as early as next week to find out what the shipping companies are doing. But right now we're going to say thank you, Mark Szakonyi, executive editor of the Journal of Commerce by IHS Markit. All the best to you.